Hi everybody, Basel 3, the Net Stable Funding Ratio. Welcome to the reading room of the Basel 3 Compliance Professionals Association, the largest association of Basel 3 professionals in the world. The Net Stable Funding Ratio is one of the Basel Committee's key reforms to promote a more resilient banking sector. It will require banks to maintain a stable funding profile in relation to the composition of their assets and off-balance sheet activities. A sustainable funding structure is intended to reduce the likelihood that disruptions to a bank's regular sources of funding will erode its liquidity position in a way that would increase the risk of its failure and potentially lead to broader systematic stress. The Net Stable Funding Ratio encourages better assessment of funding risks across all on and off balance sheet items and promotes funding stability. During the early liquidity phase of the financial crisis starting in 2007, many banks, despite meeting the existing capital requirements, experienced difficulties because they did not prudently manage their liquidity. The Basel Committee has further strengthened its liquidity framework by developing two minimum standards for funding and liquidity. These standards are designed to achieve two separate but complementary objectives. The first is to promote the short-term resilience of a bank's liquidity risk profile by ensuring that it has sufficient, high-quality liquid assets to survive a significant stress scenario lasting for 30 days. To that end, the Basel Committee has developed the liquidity coverage ratio. The second objective is to reduce funding risk over a long time horizon by requiring banks to fund their activities with sufficiently stable sources of funding in order to mitigate the risk of future funding stress. To meet this second objective, the Committee has developed the Stable Net Funding Ratio. The Net Stable Funding Ratio is defined as the amount of available stable funding relative to the amount of required stable funding. This ratio should be equal to at least 100% on an ongoing basis. Available stable funding is defined as the portion of capital and liabilities expected to be reliable over the time horizon considered by the Net Stable Funding Ratio, which extends to 1 year. The amount of required stable funding of a specific institution is a function of the liquidity characteristics and residual maturities of the various assets held by that institution, as well as those of its off-balance sheet or OBS exposures. The Basel Committee on Banking Supervision has also issued the final Net Stable Funding Ratio disclosure standards, following the publication of the Net Stable Funding Ratio. This requirement will improve the transparency of regulatory funding requirements, reinforce the principles for sound liquidity, risk management and supervision, strengthen market discipline, and reduce uncertainty in the markets as this Net Stable Funding Ratio is implemented. It is important that banks adopt a common public disclosure framework to help market participants constantly assess banks' funding risks. To promote the consistency and usability of disclosures related to the Net Stable Funding Ratio, the Basel Committee on Banking Supervision has also issued the final Net Stable Funding Ratio disclosure standards following the publication of the Net Stable Funding Ratio. This requirement will improve the transparency of regulatory funding requirements, reinforce the principles for sound liquidity, risk management and supervision, strengthen market discipline and reduce uncertainty in the markets as the Net Stable Funding Ratio is implemented. It is important that banks adopt a common public disclosure framework to help market participants consistently assess banks' funding risk. To promote the consistency and usability of disclosures related to the net stable funding ratio, the Basel Committee has agreed that internationally active banks in all Basel Committee member jurisdictions will be required to publish their net stable funding ratios according to a common template. In parallel with the implementation of the net stable funding ratio standard, supervisors will give effect to these disclosure requirements, and banks will be required to comply with them from the date of the first reporting period after the 1st of January 2018. Do you want to learn more? Sign up to receive our monthly newsletter at no cost. Compliance with the Basel III framework is a moving target as regulators continue to develop new standards and regulations and amend the previous ones. The Basel III Compliance Professionals Association is the largest association of Basel III professionals in the world. You can easily subscribe at the reading room of the Basel III Compliance Professionals Association. Just Google Basel III Association and you'll subscribe in just a few seconds.